Hi, Frank McLaughlin here again, and today's video is all about how much do I need to take for my required minimum distribution, also known as an RMD. Here we go. The wonderful thing about retirement accounts is their tax-deferred and sometimes tax-free nature. But at some point, the government and IRS wants to recoup some of those tax savings that they've allowed us to have. So that's when an RMD, or a required minimum distribution, kicks in. Now, the previous age for these to begin was 70 and a half, but recently in the past few years, that age was moved back to 72. So, if you were born on July 1st, 1949 or later, your RMD age will be 72, with the first distribution being by April 1st of the year following your birthday and December 31st for all subsequent RMDs. Although to avoid taking two distributions in the same tax year and potentially jumping up into a higher tax bracket, consider taking your first RMD in the year that you turn 72. Now, the easiest way to calculate how much your distribution will need to be is to Google required minimum distribution worksheet. The IRS puts all of the updated tables online. It's important to call out here that these apply to most all retirement accounts except for Roth IRAs. So that includes traditional IRAs as well as workplace retirement accounts, 401ks, 403bs, even a Roth 401k, unless there are some very special circumstances that allow you to keep working and defer those RMDs. In most cases, plan on needing to take those once you reach RMD age. When you have the correct IRS tables in front of you, you'll notice two columns, one that says age and one that says distribution period. Now, find the age that you'll be turning this year. Let's say in 2021, you'll be turning 72. Find that appropriate row and then the corresponding distribution period. So for our example, if it's turning 72 in 2021, the distribution period would be 25.6. The next step is to find out your retirement account balance from the previous year's end. So continuing with our example, looking at what my balance was in my IRA or other account as of December 31st of 2020. Now I take that amount and divide it by that 25.6 that we had found from the IRS table, and that will be the required amount that I'm to take out this year. It's very important to make sure that you satisfy these RMDs because any amount that I don't take out that was required, there'll be a 50% penalty, which is so steep. So let's say that my required minimum distribution for this year was $20,000. If I don't satisfy that and take that amount out, I would owe a $10,000 penalty tax bill, which you want to avoid at all costs. There are some other smaller rules to know, such as if you have multiple IRAs, you can actually aggregate the RMD that you have to take and satisfy them just by pulling from one of those accounts. Now, when you pull out the distribution each year that you're required to take, it is taxed as income to you. Well, if you don't need those funds and you're charitably inclined, one way to avoid that tax bill is by donating your RMD essentially, and it's called a QCD, or a Qualified Charitable Distribution. I hope I've provided you with enough information today to feel completely confident to take your RMD and make sure it's done accurately. But if not, please reach out. I'm happy to help answer any questions and help you calculate what your potential required minimum distributions will be down the road. Talk to you soon.